Okay, good evening, everyone, and welcome back. Peace and blessings be upon all of you. Today is August the 13th, 2023. Just going to do a quick rundown here of just a couple of recent trades that I took, why I took them, talk a little bit about the results from the month of July, which was a pretty good month in my opinion. Um, Mainly talk about what to do when you face a losing streak, which is going to happen to every single trader who's trading real money, of course, out there. And we will um, finish off with just a quick market recap. I don't want this to be longer than 30 minutes. I have a date with my daughter, and it will, probably go for a little bit. So I want to be able to spend as much time with her as I possibly can. This is the reason why we trade, is to be able to spend time or more time with our loved ones. Speaking of loved ones, if we could all just take a moment of silence and say a quick prayer for the late Rob Smith, who, as we know, passed away a little while ago. May he be received in God's good graces. May he rest in peace. We all love him and value him for everything that he did for the community. And so we are eternally grateful for him and his teachings and bringing the world the strat. So shout out to Rob. Rest in peace. We love you. And, we miss you. So let's get right to it. Let me share my screen here. And let's talk about some of our recent trades. So, the month of July was pretty good. I ended up withdrawing. So you guys know that I trade an account between 10 and 30K, depending on kind of how I'm feeling. In the month of August, you can see here, I will move this over. And this is posted, of course, in the Discord for those of you that are there. I ended up taking out about $22,000 from my account in the month of July. So far, I've taken out 2,500 in the month of August. So it's been, pretty good trading lately. The main thing that I want to really focus on is showing you guys what our clean setups are, the importance of taking profits at targets, and what to do when things start going against you, okay? Anybody who's traded for any period of time knows that there are going to be periods of time where everything you touch turns to gold, and sometimes everything you touch turns to crap, right? That's just the way the market is. Sometimes the market is just doing what it's supposed to do. Other times, perfectly good A-plus setups just fail for absolutely no reason whatsoever, except the market, right? We always have that systematic risk, no matter what. As long as we are participants in the markets, we have the potential of both gaining and losing money, which is why it's so important for us to first and foremost always manage risk. If you are trading, your first priority is to protect the money that you already have. Then we focus on being able to grow our capital. Because once you run out of trading capital, it's game over. It's like running out of oxygen when you're scuba diving. That's it. All right. So, some of the recent trades that we took, SoFi was one of them. This was actually a really good trade. I did hold this trade through earnings. I usually don't, for a variety of reasons. Number one is earnings are 50-50. It could go in your favor. It could not go in your favor. They could have fantastic earnings and then get wrecked. They could have absolutely crappy earnings, but the market loves it and it takes off. So SoFi was a trade that we did take. We got in back here on July the 10th. We did get another opportunity on that same squeeze. Well, actually, I guess it would have been a new squeeze back here. So, we took this trade. I took this trade off. It continued higher. It does. It happens. Then there was another squeeze here. And actually, I think this was the one that we took. Blew through our targets. And this is the importance of taking our profits at targets. Because if we go back to IONQ, which was another trade that I took, some time ago, we were in here. Back here, we had this squeeze. This thing absolutely just ripped higher, hit the first target, hit the second target on, that one candle, and then continued to rocket, right? Imagine selling at, 11 or 12, only to watch this thing run all the way to 20. Happened to me with Riot, right? This was a trade that we took way back here. I took this trade back here as well in April. Mara was the same thing. You know, this was a new trade that I took in Mara, which, full disclosure, I am getting my backside handed to me on right now. I'm going to have to cut that next week, but that's another story. So, you know, sometimes this happens and sometimes this happens, right? If we don't take our profits at the target and it does this, we just feel kind of crappy, right? But we did our job. This was a 5 out of 5 trade. We got in where we were supposed to. We got out at our targets. Because if you try and hang around for too long, right, and you get greedy and you think that your trade is going to do this, or ENVX, I've already deleted it, is going to do this, and then you stick around and it does this, you're in a world of hurt. Not only did you have a profitable trade that would have taken you right to your target and sometimes past it, you got greedy and you ended up giving it all back to the market. We do not want to do that. The idea is that when we're in profit, we keep our profit. We make our money, and that's it. There's a watermark on the screen share. You know what? I think we had the same problem last time. Dang it. I'm not sure how we can turn it off. Can you see the screen at least? You know what? I'll post these in the Discord as well. My email. Okay. So you can see the screen, but there's a watermark. Darn it. Okay. I'm not quite sure how to turn it off. I think somebody had mentioned that earlier. I will fix it. So for now, what I'll do is I will, you know what? Give me 1 second. I'm going to pause the recording here just for a second, and I'm going to see if I can fix it right now. Give me like 30 seconds. I'm just going to pause the recording here. Stop the share and pause the recording. All right, so sorry about that. Wasn't able to fix it right away, but I will see if I can get it fixed for the next one. Yeah, that kind of sucks. Background and effect. No. It doesn't let me do it while we're still on the call. And I don't think it was it there last week? Do you remember? Yeah, anyways, not important. We'll figure it out. Okay, so the reason why we want to make sure we take our profits when they hit our targets is because things like this can happen, right? If you thought that something like PLTR, fantastic trade, right? You were in here, you were out here. Take this squeeze again, you know, and if you thought that this was going to continue and pull an ENVX type move or an IONQ type move, and then you let it come all the way back, that's just not good trade management, right? So we want to make money and we want to keep money. You can make $1 million and then lose it. All you can say is that you made $1 million and then lost it, right? So it's not what you make, it's what you keep. You're better off, you know, making 5K and keeping it than making $1 million and losing it, right? The whole idea is that we want to extract money from the markets and we want to keep it. And when we don't take our profits when we have them and we start letting those green trades go red, that is a big, big, big no when it comes to being a professional trader, okay? When the market makes money available to you, take it. Do yourself the favor, pay yourself. Paying yourself has a few benefits, which we'll talk about here in just a second. But, you know, it's really important that, you know, if you get these types of moves, you know, this one worked out back here, and then this, of course, crapped the bed. But you can see a lot of these names that we took recently either worked really well or we had to cut them short, right? But they all look the same. We're buying at the 21. We're selling when we get to +2 ATR. Sometimes we'll hold on for an extension, but like here's a perfect example, right? And I left a lot of money on the table with Mara, right? I left a ridiculous amount of money. For those of you in the room, you know, that were in the room, you guys know about those recent trades that I've had. Here's another one, right? I took the short on Nvidia. I had like the 475 put here, way back here. And then I ended up selling it like around here, only to watch it do this and then jump up and then just absolutely get wrecked. Like if we're down at 408, that's $70 a contract-ish, plus whatever time premium we had remaining. And if I'm not mistaken, I don't know why that line's not on here, but I think it was for next Friday. So, you have a few of these contracts, you made a lot of money. And so you don't want to just end up giving it back to the market. And so looking at the markets right now, before we get into sort of the psych session, just a quick top-down analysis. If we're looking at the daily charts, the SPY, it doesn't look really good right now. We've got a squeeze on the daily. This 8 crossed the 21. This was actually a fantastic short. I wish I wasn't so busy at the office last week, but this would have been a fantastic short here at the 21. So our target, if we project it down to, -2 ATR, takes us down to about 440, right? Could run a little bit further than that, but, there are some gaps here, and gaps like to get filled, right? Eventually over time. Right now, daily chart on the SPY, not looking the greatest. On the weekly, let's face it, we had an incredible run, okay? This was, I remember looking at the Qs. This was a fantastic run that we had here on the Qs. We were like up 19 weeks, and it was like 30% plus. So, fantastic move to the upside. A correction back down to the 21 weekly, which would also be the 618 retracement of that recent move, the high to the low, or sorry, the low to the high. Wouldn't surprise or shouldn't surprise anybody. So we might see a little bit more volatility. We do have a little bit of room to the downside here, which would bring us back to a good buy point if we're looking to trade or if we form a squeeze on the weekly. But on the daily, no bueno. That squeeze looks like, well, on the Qs, it's already fired short. On the SPY, it has yet to fire short. So if the Qs are leading the way, the SPY is not far behind. We look at IWM, same thing. We got a squeeze, fantastic setup back here. But the weekly, lots of room to the downside, right? This squeeze already fired. We got up to that target, right? Basically made almost the double top. But you can see the importance of trade management, right? If you took this trade back here when you had this 821 cross, momentum had shifted on the weekly, this ran. And so if you get close enough to your target, nothing wrong with taking those profits, right? Same thing back here. Fantastic setup. Boom. Kept running for a bit, kept running for a bit. But if you're still holding on thinking, hey, this might continue higher, and you just let this trade continue to go against you, it's problematic, right? Honestly, sometimes trades go against me. And sometimes I let them go too far against me. But I manage my risk through my position size. I trade a small account intentionally because I can be, pretty aggressive with my trades. But at the same time, I'm not putting myself in a position where I'm just not comfortable, right? And I can take, what might seem like a huge percent, or not a huge, but a big percent loss on my position, and it's not the end of the world. And so I trade at a level with my account level is comfortable for me. So if it goes to, minus 75%, it's not the end of the world. Now, not that I would let it go there intentionally, but things happen, Sometimes you're busy, sometimes you've got other things on the go in your life, and trading is not your biggest priority at the time. I'm sure you can all relate to that, and it happens. And sometimes the markets get choppy. There's a litany of reasons why things can and will not go in your favor all the time. Sometimes everything you touch will just work out. Other times, it's just not going to work. You'll have perfect A+ setups where if you see that setup, you're going to take it every single time. And guess what? Some of those setups will fail. Because remember, we're not in this for the next trade. The next trade should be absolutely meaningless over your entire trading journey, unless it's a huge trade, in which case, fantastic. Remember it to, tell the story and maybe take some of that money out and do something good for yourself or your family or the community with it. But for the most part, those trades, they just go in the log and that's it. It's over, 25 trades, 50 trades, 100 trades, 1,000 trades. How do you manage your account? And this is, sort of the topic that I want to touch on for this evening is you will have trades that will work. You will have trades that don't. Over a period of 1,000 trades, statistically speaking, it is almost a guaranteed certainty that over 1,000 trades, you'll have a loss of, 5 trades in a row, 10 trades in a row. It'll happen. It's inevitable. It will happen. The question is, how do you manage those trades? Because if you're not managing them properly, guess what? You're going to be in a world of hurt. It's not what you make, it's what you keep. So do your best to keep the profits that you get. All right. Because if you don't, guess what? All that work was for nothing. Right? You know how sometimes you go to the beach and you build a huge sandcastle and then somebody just comes across and just kicks it down? Well, you do that with your trading account. You grow your account, you grow your account, you grow your account, and then you go on a losing streak. And it's usually after a hot streak that you have a losing streak. So now your confidence is inflated. You've got that euphoria. The euphoria is worse than the fear. Remember that. The euphoria is worse than the fear. Sometimes the market conditions change. And then what happens? Now you're trading your biggest position size at the level where you're not only, at your utmost highest level of confidence, you are sitting there thinking that you can do no wrong. Like you own the market. The market's going to humble you. It always does. When you've been trading long enough, you will realize that the market will always humble you if you don't remain humble yourself. I see a lot of traders out there, especially on FinTwit. I'm the greatest trader. We're the greatest group. Nobody trades better than we do. I don't see guys like Bill Ackman who are trading billions of dollars, George Soros. I don't see them posting screenshots of their trades, right? Now I post my screenshots in our group, but that's just so that you can see, the trade setups and, what's possible. And of course, I could trade a much larger account if I so chose to, but I trade at a level that's comfortable for me. Always do what's best for you and your account. Me having 6 or 7 figures in my account, my trading account, doesn't do anything for my ego. I'm fully aware of what my strengths are as a trader and what my weaknesses are as a trader. I don't need outside validation from anybody because I know the profits that I've made over my career, and I know the things that I've done with some of those profits, the places I've traveled with some of those profits, the things that I've bought. My daughter goes to a private school. All of these things I pay for with my trading profits. So you don't need that external validation. Don't let anything that you see on FinTwit detract you from your goal as a trader. Your goal as a trader is to trade the best that you can, to make money when you see the opportunities, to manage your risk, and let the rest take care of itself. Sure, you can compound your account. You've seen the numbers. I spit these numbers out all the time, 1% a day off of 1,000 by the end of the year, how much money you have. Well, sure, people can make 100%, 200%, 500%, 1,000%, 10,000% off of trades. At the end of the day, how much money did they actually make? How much money do they actually keep? And that's the idea, is you want to be in this business for a long time. There are people who, were hotshots before the financial crisis, during the financial crisis, after the financial crisis. They're nowhere to be found. There have been groups, communities, leaders, they fade away. You want to have the skills that you've developed over time to be there for you when you need them. And you can reach a level as a trader. Maybe some people don't want to quit their jobs. I know some people that actually enjoy their work. There's a few people in our group that absolutely love what they do. To them, they have no ambition to be a full-time trader. It's just extra money, right? Some people want to be a full-time trader. If you do, great, it's possible, but you have to do things the right way long enough consistently. And if you're just in it for fun, it's going to cost you money. I don't know very many people who have been profitable over an extended period of time and kept those profits that are just doing this, just because it's fun. Like, you have to take it seriously. Don't be upset by the results you didn't get for the work that you didn't do, right? I'll say that again. Don't be upset by the results you didn't get for the work you didn't do. All of you who have worked with me over a period of time or who know me from various other places, you know that I'm always saying the same things over and over again, right? Hence the reason why I use the name Discipline Over Dollars now, because you need to know that it's all about doing the same thing over and over again. My setups, they all look the same. Sure, the profits might change based on where I exit. Maybe I get stopped out. Maybe I take losses. I'm in a couple of losing trades right now. I have absolutely no problem admitting it because I am not a perfect trader. Nobody is. Anybody who says that they never take losses probably isn't trading real money. I don't know any other way that you can never take trading losses unless you're trading fake money. Let them do what they're going to do. It's not important to us. What we want to focus on is finding those setups, positioning ourselves, managing our risk. Everything else will fall into place. Because when you can compound those gains, and for those of you that have started out with small accounts and had some success recently, you can see how your account can grow off just a few good trades. And so why is it so important to keep doing the right things? Because eventually you will run into a losing streak. It could be because, sometimes, hey, maybe just your luck has run out. Maybe sometimes the setups just don't work. The US got downgraded the other day. Okay, the market went into a tailspin. There's a lot of reasons why. Earnings could be bad. This could happen. Inflation numbers, CPI, Biden, Trump, blah, 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 blah. There's always a reason. There's a fantastic chart. I'll see if I can find it and post it in our room that shows all of the major headlines over the years and the returns of the market. And it's a fantastic chart to remind you that over time, the market has an upward bias. Hence the reason why so many buy and hold investors do well over time. And that's one of the main reasons why you should let your gains in some cases compound. I've got a much larger account that I keep that I'm either in cash in or I'm in an index fund. That's it. My trading account, sure, I'll keep it 10K, 20K, 30K, depending how I feel. But why do I keep it at that level? Because that's the level for me that I'm comfortable with. There's no point in having 6 figures in your account and you trade like a degenerate and end up losing most of it. And then what? And then what? So how do you come back from a losing streak? This is a tough one, right? There's a few things that you need to do when you start taking losses. First of all, if you are taking losses, figure out what's going on. Take a moment or a few moments. If you haven't been reviewing your trades, you need to be. You guys know that every single time we have a session, what do I say? Plan your trade, manage your risk, review your trades, journal. Why? Because these are the things that successful traders do. If you want to be successful, you need to do what the successful traders do. If you want to bench press 250 pounds, you got to go in the gym and put in some work. Trading is the same. It blows my mind when I see there are traders that expect to be successful, but yet they don't put in the work. If you're not tracking your trades, first of all, if you're not planning your trades, managing your risk, managing your position size, following your trade plan, reviewing your trades, and journaling about it, you're wasting your time. You're probably not going to make it long term as a trader. That's the truth, right? I'm not here to sell you a service. I'm here to help you improve your trading. And I'm telling you that if you're not doing these things, which, by the way, successful traders are doing those things, you're probably not going to make it as a trader. And that's fine. Not everybody wants to be a trader. Not everybody will be a trader, at least not profitable and successful over years. And, maybe it's a little bit of harsh reality, but some of you need to hear it. Consider this just, a wake-up call. So if you're taking losses, first of all, reduce your position size, reduce the frequency of your trades. Trying to trade your way out of a losing streak is not going to help. You're going to end up blowing up your account, right? So what do? One of the most important things that I do, first of all, if I've taken a few losses and then all of my trades that I'm in right now are losing trades, I'll just cut everything, go to cash. And then I can look at things objectively, because that trade that maybe you're down on, sometimes even if it's a winning trade, I'll cut it just because I just need to reset the board. And then what will I do? Or what can you do? Be more selective in your trades, right? This is always a good habit. Only take those A+ setups. The setups that, all of your previous winning trades looked like. If you've been trading the same system over and over again for some time, you'll know that some of the trades look pretty much the same, right? A lot of these trades, back when we took them when they were profitable, right? They all looked very similar, right? BA is another great example. NVIDIA to the downside was a great example. This was a +3 ATR trade. But then we also had the squeeze here, which fired short. I unfortunately missed this trade. A couple of people in our group hit it, so I'm happy about that. But you can see, still some room to go. And they've got earnings coming up. Like, my goodness. And, I'm not saying this is going to happen, but if they beat earnings, we could see a huge run. If they miss earnings, and I didn't really want to do much of an individual market review, but if they miss, see this gap down here? Or you could even do it to here if you really wanted, but I like to do the full gap. That looks like a magnet to me, right? So whichever spot you take it from, could be, this 303 level, could be this high 318, either way, right? Here we're being a little bit more conservative. That looks like a magnet. And if we miss on earnings and that gap gets filled, that's a long way down. That doesn't mean we should go out and look for a trade there right now, right? The spot to take this trade was back here. For me, taking that +3 ATR trade was back here. So I had the 475 puts for this Friday, which I sold clearly way too early. Is what it is. You're always going to leave money on the table. So when you start taking losses, reduce your position size. Reduce the frequency of your trades. Be much more selective in your trades. Sometimes it's good to know when to stay out of the markets. There's nothing wrong with staying out of the markets. Sometimes the best trade is the trade that you don't take. Cash is also a position. Cash is also sometimes the best position, right? If things just aren't working, if you've got things going on in your life, take a break. The market's always going to be there. Always going to be there, right? When the market is in your favor, make your money. When you make your money, pay yourself. Why is it so important to pay yourself? Because you're taking money out of the market. Your account is then not as big. And so if you do go on a losing streak and you lose a significant portion of your account, you've already paid yourself a lot of money and you can rebuild that account. Because, going on a losing streak with a 10K account and going on a losing streak with a 50 or a 100K or a 500K account, they're kind of different, especially if you're trading larger position sizes, right? Now, position sizing is something that we'll talk about in a future session. For me, I trade my smaller account, my aggressive trading account. I trade that very aggressively. Many times I leave money on the table, but I'm able to compound my account. I'm able to pay myself from that account. And when things are working, they're working. And I'm paying myself. When things are not working, I'm not trading with a bigger amount. I'm trading with an amount that I'm comfortable with. The account value drops to a point that, I just have to be much more selective with. I have no problem looking for one really good trade with a lot of time and letting that trade work. At the end of the day, the whole idea is not to sit in front of the screen all day. The whole idea is to extract money from the market. Take that money when the market makes it available to us, as Mark Douglas says, right? God rest his soul. And so that's it, right? When you go on a losing streak, how do you bounce back? You bounce back, first of all, by looking at where your trades are going wrong. Is it you? Is it your setup? Are you chasing trades? Are you being impulsive? Are you not planning your trade? Are you not respecting your stop? Are you not using a stop? Is your position size too big? What's going on? Usually when you go back and you review your trades, you have a pretty good idea of what went wrong. And when you build that positive habit of always planning out your trade, you can see that most of the trades I'm taking, almost all of the trades that I take, 99% of the trades that I take, I've got a setup, right? And I've got, it marked on my charts, right? You can see these, right? I mark up my charts. Why do I do that? Because when I go take my screenshot, it's there. And then when I exit the trade, I know exactly why. And so sometimes trades work out, right? This was a trade here that I took, didn't work out. I actually ended up cutting this early. I took wasn't a very good trade that I took back here. It was more of a degenerate entry. I took the loss on it. It's my own fault, right? As the Japanese say, sometimes even monkeys fall from trees. I've been doing this for a long time. I still make mistakes. Every trader out there makes mistakes. Every real trader out there makes mistakes. The ones that never lose money, the ones that, you know, you know where I'm going with this. And I don't want to really take any more time to discuss something that we've already discussed in the past. Know who you're learning from, know what you're seeing, be careful out there. And if you don't take trading seriously, you're not going to get the results that you're looking for. Don't let the market influence you into being greedy. That's why we take our profits at our targets. Sure, sometimes you're going to leave money on the table, right? I left a lot of money on the table with Nvidia or with Mara, right? But for every one of those trades, you're going to have something like PLTR, which you think, hey, this thing's just going to keep running. Well, this thing hit 4 profit targets before our expiry. If you were still holding on thinking thing's going to go to the moon, well, look at where you are now, right? SoFi was another example, right? Blew through our targets and then started coming back in. A lot of these other names, right? They've all started to see corrective activity, right? And so that's pretty much it. So what I want for future sessions is to be able to answer some more questions. So some people did have some questions that they had asked previously that I've already answered. So if you do have any questions, feel free to drop me a line on the YouTube or in the Discord, which is private right now. Not really planning on opening it up to the general public. It's just sort of inner circle people that I've worked with in the past or have an existing relationship with. So unfortunately, it is closed. I don't charge money for it, but I'm here to show you how I trade, the results that I have. There's a lot of paper traders out there, people who are making their money off of affiliates or off of subscription fees. And if that's the route that you want to go and eventually run your own business, power to you, right? But if you are posing as a real trader and you're paper trading and you're not making money, you're not showing your trades, you're sending out alerts to members and they don't know if you're in the trade or not, there are problems there, right? And that's a really big problem, especially if you're in an alert service and you don't know where somebody else got in, because it's common practice amongst people who have, we'll call it lesser morals or ethics, where they will enter a trade, alert it to X number of people in their circle, and then use those individuals as exit liquidity. You've seen many examples of this, where people get caught on something like, unusual whales or, some other services where somebody says, hey, I'm buying at 15, but they really bought at 5 cents. And then they're saying that they're buying at 15 and they're dumping it at 30, 35, claiming these huge percentage returns, when in fact, all they did was use their member base as exit liquidity. So be on the lookout for things like that, right? These are things that you really want to stay away from. You want to avoid those types of organizations. I'm not pointing any names, I'm not pointing any fingers or naming any names, You can do that research for yourself, but be careful out there. Always do what's best for you and your account. At the end of the day, that is all that matters. Don't seek validation from others. Don't care what others say. If you're trading real money and your own account with your profits and you're using those to better yourself and your family and the community, then keep doing that and always pay it forward. If you learn something, share that with somebody else, right? There's a lot of really good free material out there. In fact, I've seen some groups, been part of some groups that have way better content than some groups that are charging 20, 50, 100, 150, 200, $500 a month. Find yourself somebody that genuinely wants to teach you and work with them. All right. That's it for me. I have a pizza and Disney movie marathon to attend to with my princess. So have a good night, everyone. Take care. Peace and blessings upon all of you. If you have any questions, feel free to reach out. Otherwise, take care. Have a great weekend or week ahead, and I'll talk to you soon. Bye for now.